Hey, good morning, everybody. Good to be with you here on a Monday morning. We had a beautiful weekend here in Wisconsin, still missing out on some moisture, but other than that, no complaints. Let's take a look at what's going on in the grain markets here this morning. You got these corn up 6.5 at 501. November beans up 15.5 at 1343 and a quarter, and you've got wheat up 2. Equities slightly lower here. We've got crude oil down about 50 cents. USDA report out on Wednesday, 11 o'clock Central Time. Everybody's looking at the yield. Typically, the USDA does not adjust yield on the July report. It does happen, but it's not common. Nonetheless, the trade is leaning towards a yield reduction. I would say if there's going to be a surprise, it's that if the USDA reduces the yield further than what the trade is expecting. But again, not common for the USDA to adjust yield in the July report. Let's go over to the funds here. They are now net short corn, about 18,000 contracts, selling off about 70,000 here from the Tuesday to Tuesday period. Very obvious in the charts, back to more of a neutral position. We'll see the funds definitely are saying never underestimate the potential for the U.S. farmer to raise a corn crop. They got rid of that long position. Soybeans still net long. Wheat headed back in the short direction, but again, not overly bearish at this time. 7-day QPF looking decent, mostly in the southern parts of the Midwest in here. Obviously, Indiana, Illinois, some critical areas. Here's your observed precipitation over the last 7 days. Fairly good coverage, I would say, throughout most of the Corn Belt. And lastly, here's your Euro run over the same 7-day period. So in fairly good agreement with that QPF map, showing a little more moisture maybe for Illinois and us here in Wisconsin, Michigan, certainly some of the drier areas. So we will see this goes out to the 17th. Let's take a quick look at some charts here. November soybeans, nice little pullback. I want you to look at what the price structure is doing here. You've got the 50-day down at 1250. We had a big 50% retracement on that last move down, recovered back near 14, pulled back again, now about 50% of this recent move. I would say $14 target is reasonable. This chart could be argued bullish. Here's your December corn chart. Massive sell-off, sideways below the 50-day. Here's your beans. Here's your corn. Corn is not a bullish chart. Bottom line, if you are going to put your money somewhere or risk to reward, we would look more towards the bean side of things than corn. That being said, corn could still put in a rally. I pointed out 50% retracements on the soybean chart. 50% of this recent down move would put you somewhere in that 530 to 550 area. Again, a good spot to be looking at making some additional hedge decisions. I would not necessarily get long the corn market without a major change either in the US balance sheet or the weather. So just wanted to point out real quick, beans slightly more bullish, when you look at the chart. Corn a little more bearish, neutral if best, but I would not call this corn chart bullish by any stretch of the imagination. So if you're looking to allocate dollars, you're looking to manage risk, keep that in the back of your mind. Thanks, guys, for tuning in. Please hit the like button. We appreciate that. If you're not already a subscriber, consider subscribing. It helps us out. We will be back here with our webinar for our subscribers on Tuesday. We have a trial down below if you'd like to sign up for that. Let's try and get a little bit better today, and we will talk to you guys again soon.